the next topic, we'll talk about the classification of asset, and this is normal classification of asset. There are various other classification of asset, but for you guys, you have to remember this. And certainly, you know what happens when while we know about fixed asset, current asset, tangible asset, and intangible asset, there are at times we miss out on wasting asset, fictitious asset, liquid asset, and certainly you can expect a question from these categories in your examination. And what usually happens is that students miss out on this because they're very well versed with the first four, the classification of asset, and they're like, okay, give us any question, give us a tricky question, even then we can solve that. But when it comes to the last three, they are confused, and they mark the wrong option. So we'll talk about the classification of assets. So firstly, we'll talk about fixed assets. Fixed assets are those assets which are purchased for the purpose of operating the business. In my example that I gave you just few minutes ago, the machinery is fixed asset, and they are not for resale in ordinary course of business. When I have bought the machinery for manufacturing of the products, I'm not going to resell the next month. If the work stop, if let's suppose the factory stopped for a while, there is some issue, the factory has stopped working, I won't go and resell my machinery because it's a huge investment for me, and those are fixed assets. So land buildings, machinery, furniture, these are all example of fixed assets. Now, what are current assets? Current assets are those assets of a business which are kept for short-term period with the purpose of resale or converted them into cash. So we are, basically differentiating between fixed asset and current asset. So current asset are those assets of a business which are kept for short-term period with a purpose, right? So these are kept for short-term period, whereas fixed assets are, kept for long-term period. And uh, you know logically they have huge investment. Current asset, not so huge investment, not. And certainly they are used for the purpose of resale or converted them into cash. For example, bank balance, even your bank balance, that is your current asset. You can withdraw the money whenever you want to. Unsold stock, if you have any unsold stock at your place, you will definitely want to sell them, even if you have to sell them at a discounted price, but you want to sell them, right? Debtors, bills receivable, prepaid expenses, accrued income. So BR is basically you will be getting that money after a while. So those are current asset, or else you can discount from the bank and you can get the money whenever you want. So these are fixed asset and current asset. The difference majorly is that current asset are kept for short term, whereas fixed asset are kept for the long term. Right. The third thing that we have to learn is tangible asset. So tangible asset are those assets which have physical form or existence, right? So it can be fixed asset, it can be current asset. Like some of the fixed asset are tangible assets, some of the current assets are tangible assets. So it's not like that only fixed asset will be tangible asset. No, that's not how it is. Tangible assets are those assets which have physical form, right? In our example, I've been talking about machinery. I can touch that machinery, so that is having a physical form or existence. They can be seen and touched. For example, land, buildings, machinery, furniture, computer, etc. Even the video that I'm recording through this one on my computer, so even that is a tangible asset, right? So these are the easier, like the easy one, the classification of assets. Now we'll move on to bit tricky one. So the first one is intangible asset, the opposite of tangible asset. These are those assets which does not have any physical form or existence, or they cannot be seen or touched. For example, goodwill, right? So let's suppose a brand has, we associate great goodwill with Tata because they have built a reputation over time. It's not like you can you enter a business and you can buy that goodwill. So intangible asset is like that has been built over time and it does not have any physical form. But let's suppose Tata wants to sell everything associated with them to someone else. That is possible. But that goodwill that has been generated, right? Similarly goes for the brand value as well. Now we're talking about copyright licenses. So these are all intangible assets. You are basically saying that you can start this business, right? So like the Windows software. The Windows software is being used by so many laptop vendors, laptop providers, even Lenovo, HP, Dell. So all of these are providing Windows software. So they have given the licenses that you can go on and provide our Windows services. For that, they are charging them some money. So these are intangible assets. You cannot touch them. I cannot touch the Windows. I cannot touch the Windows because they do not have any physical form. These are experience, right? So you experience that. I am experiencing how does using Windows is like, right? So that is intangible asset. Now the next thing. Now it gets more tricky. So wasting asset. Wasting asset are those assets which are natural resources consumed during the process of use. Now we're talking about, there are wooden beds. So that is kind of, you have an asset with you, like a wooden bed. So those wooden bed, like the wood that we are getting from the trees, right? So those are wasting asset. You are actually converting woods and cutting them and finally making a bed out of it. So those are using and consuming natural resources. So we are saying that we are using the natural resources. These are all called wasting assets, right? So wasting asset, as I gave you an example, like a bed. Bed is a great example of wasting asset. So what usually happen in this one, the woods from the trees are being converted, cut down, and finally being used in your bed. And same goes for the coal. You are using electricity based upon coal. It's not like we have plenty of coal with us, and if we go by the stage, if we don't move to renewable energy resources, we will run out of coal in some decades. So that's how it is. That's wasting asset. Now the next one, fictitious asset. So these are assets which are cannot be sold. Intangible asset can be sold, right? So these assets cannot be sold, or asset which have zero market value. So you have to remember, because I have got the question on this, which asset is also known as zero market value. You have to remember this. There is a question right there for you. Zero market value asset are called fictitious asset. These cannot be sold. So fictitious asset cannot be sold. You can definitely get 2 3 pointers, like option 1 says that these assets cannot be sold, and they have zero market value, or these are losses that are written off not in the year which in they are incurred, but more than accounting year. And you have to mark that all of these options correspond to fictitious asset. So you have to remember this, because the examiner are getting more smart. They are not just straightforward asking you questions. They are trying to ask they're trying to test your knowledge, and they can do it with the help of such things. So firstly, they will ask you, like, they will give you 3 points, and they'll in the option they'll say ABC right or D right, and ABC or ABD is right. So you have to remember that these assets cannot be sold, or assets which have zero market value. These are all fictitious assets. These are losses. So while running a business, you have incur few losses, but these losses are not written off in the same accounting year, but in the following accounting years. These assets are also known as deferred revenue expenditures. So when you make them expenses, when you make some expenses to earn revenue, those are called deferred revenue expenditure. Deferred as in, because you are not writing off those losses in that particular year, you are deferring it to the further years. These are neither tangible nor intangible assets. For example, advertisement expense, share issue expense, underwriting commission. So basically, you are saying that you like, be it advertisement expense, share issue expense. These are expenses. So you cannot sell them to anyone else. You cannot sell them, and nobody will buy them, because these are zero value. So who will buy those, right? So these are fictitious assets. And very important and very tricky. You should definitely remember this. You can expect a question from this very easily. Fictitious asset. Last thing, liquid asset. So these assets are those assets which can be easily converted into cash within a short span of time. These are known as liquid assets. Cash in hand, cash at bank. So you can easily go to the nearest ATM and use your debit card, and you can withdraw the money you want to. So these are liquid asset. Even bills receivable, as I told you, that if I have a bills receivable, I can go to the nearest bank and give them that this is the beer. and the bank will give me the money, but after discounting it, after charging few money on their front. So I will get the, let's suppose I have to receive 10,000 rupees. So bank will say, we are charging you 500 rupees and you will get 9,500 rupees right now. So that's BR and that's liquid asset. That 10,000 rupees was receivable to me after a month, but I wanted the money quickly right now. At this very point, I went to the bank and got 9,500 rupees. So the last thing, that a very important thing, the golden rules of accounting, very important and very crucial. These are the basic. This is the very base of accounting. The first, there are three accounts: real accounts, personal account, and nominal account. So firstly, what are real accounts, personal account, and nominal account, and then we'll talk about the debit and the credit rules. So real accounts are those which are the rules on your asset, on the business asset, your real account rules are applicable. So you have to remember this while we are talking about, the asset of the business, which account we deal with it, real account, right? So the rules which are applicable in real accounts are applicable to your business assets as well, like cash, land and machinery, plant and machinery, land and building, furniture and fixtures, trade market, etc. So while we are talking about the asset of the business, you have to remember that these are real accounts, and the real account rule will be applied on it, that debit what comes in, credit what goes out, right? So we are talking about the golden rule of accounting. First is real account. So we, whatever comes into the business, right, and whatever goes out. So let's suppose we are selling off a machinery. So we are selling off a machinery. So plant and machinery, debit to credit, because to cash, right? So debit, we are debiting the plant and machinery because we are selling off plant and machinery, and we are getting cash in in replace of it. So we are getting the cash, so we will credit the, oh sorry, it is the opposite, I actually mixed that. So whatever comes in, so cash account debit to plant and machinery, because plant and machinery is going out, we are selling off the plant and machinery, and we are getting the cash in exchange. So cash is what we are getting in, and plant and machinery is what going out. Pardon me for my mistake, happen. So we are getting cash. Cash is cash debit to plant and machinery. Plant and machinery is going out, and we are getting cash in return. So cash account debit to plant and machinery. Now the personal account. So personal account, the rules of personal accounts are applicable to person, to the individual, to the AOP, artificial person, and the representative person. So it could be like, my account, Gaurav, Aman, Ram and Sons, bank account, outstanding salary account, prepaid expenses account. So these are personal accounts. So in these accounts, what usually happens, debit the receiver, whosoever is getting the money, and credit the giver. So in this case, let's suppose I am Gaurav and I am giving some money to the to Aman. So what will be the transaction in personal account, because we have to follow the personal account rule. So I am the giver and Aman is receiving the cash. So Aman account debit to Gaurav, because I am the one who is giving the money. So I am the giver. I am the one who is giving the money. Let's suppose the transaction is for rupees 10,000. So Aman account debit. Aman is receiving the money to Gaurav. So I am the giver. So this is personal account rule, and you have to remember this is applicable on persons, artificial person, and representative persons. Lastly, the third, nominal account. We are talking about all expenses and losses. And while we are talking about nominal account, we have to remember these. The rule is applicable to all the expenses, income, and losses and profit, like salary account, wages account, purchases account, sales account, right? So if we are making any, profit while we are selling something, we'll credit that. And if we are making any losses while we are selling or buying something, we'll do the debit, right? So debit is all expenses and losses, credit is all income and profit. So these are three accounts. Firstly, real account. Real account is for the asset uh, of the business. So if I own a, or if I own a business, so asset will be the real account, and debit what comes in, and credit what goes out. As I told you, example, cash account, that is coming because we are selling out some machinery. Cash account debit to plant and machinery. Second is the real account, the account of me, any other person involved in any transaction. So here the second rule will be applying personal accounts. So debit the receiver, credit the giver. So if I am giving money to Aman, so Aman debit to Gaurav, right? So Aman account debit to Gaurav. So that will be the transaction of personal account. And finally nominal account, if we have any, we are making any expenses and any losses, that will be debited, and if we are making any profit and any income, that will be credited. So these are debit or the golden rules of accounting. We have to debit and credit according to it. You have to remember all these rules. You can definitely get a question based upon this, and you have to remember where we have to apply these rules. Real account applicable to all asset of the business. Personal account to me or any other person involved. Nominal account for all the business expenses, income and profits. So these are the golden rules of accounting. Very important thing to do. And I'm extremely sorry for the mistake that I made in the first example. So that will be all from my end. And in the next video we'll talk about the conventions and principles. That will be very interesting and an important video as well. So do join me in the next session as well. And if you are liking the content that we are providing, do leave a like and do share with your friends as well, those who are preparing for this examination. And subscribe to the channel, hit the bell icon. So whenever I come up with a new video on accounting or any other video related to your examination, you can actually, get the notification and you can watch the video on the time and prepare well for your examination. And that will be all from my side. And meet you in the next video.